from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, more tech earnings tumbling out. We're going to read on Uber, Zynga, and Etsy. Plus, Lyft's latest earnings show rides picking back up. We're going to talk about it all with Lyft President John Zimmer. Plus, major recall. Peloton says it'll offer refunds, hardware fixes, and more in a recall of its treadmill products after a child died and more than 70 safety incidents were reported. Shares tumbling? We'll have the latest. And ban upheld for now. Facebook's oversight board upholds the social media's ban on Donald Trump's account, but recommends a review within 6 months. The former president calling it a disgrace and a slight to free speech. But first, it was a busy day for the markets. Lots of earnings, including Uber to get to. And in IPO news, Jessica Alba's Honest Company started trading. Shares popping in their debut, now a $2 billion company. And later this hour, you will hear part of my interview with Alba and the Honest Company's CEO, Nick Vlahos. And if you're here for crypto, amid rallies in Bitcoin and Doge, you are in luck. We've got Galaxy Digital's Mike Novogratz joining us on the heels of its $1.2 billion deal to buy crypto custodian BitGo. To start things off, though, I want to get to the markets where tech led the losses in stocks. Our Kriti Gupta has the full picture. Kriti?
Well, Emily, let's just start macro here. You hit it, tech really losing and really weighing down the S&P 500 to even the point that cyclicals weren't able to keep that index up. The index ended up flat on the day. The notable exception, though, is going to be those semiconductor stocks outperforming up 0.6%, even when the broader index wasn't doing that great. But let's just get on to the really big story here, and that's Peloton. Shares dropping 20% in intraday trading. And get this, Emily, this is the most all the way back to Pfizer Monday, November 9th, when, of course, that vaccine news really hit that stay-at-home stocks. And we, of course, know Peloton is one of those stay-at-home stocks. I want to flip up the boards and get to those earnings stories, though, because that seems to be a really important piece. Let's just kick it off here with Zynga. Shares are up. You know that just means that they actually beat their estimates, the video game boosting their full-year guidance. Is something a lot of tech watchers are really paying attention to. PayPal, volume beating estimates, that boosting the shares in after-hours trading as well. But so you're also seeing some stocks to the downside. Etsy down after hours, thinking after the EBITDA forecast didn't meet analyst expectations. And lastly, Uber. You did see some good news out of Uber, though. Gross bookings beating estimates, strong delivery growth. Still not enough to keep the stock up. That earnings call is going on, so who knows? Maybe they can reverse course, Emily.
All right, Bloomberg's Kriti Gupta, thanks for the roundup. I want to dig deeper now into Uber's results with Angelo Zeno of CFRA. Angelo joining me now on the phone. Angelo, give us the highlights as they stand out to you. We know demand is picking up, but both Uber and Lyft having trouble meeting with supply.
Yeah, no, absolutely. So, in terms of Uber and the results here, I mean, we kind of had an indication of what the numbers were going to look like as they provided some details throughout the quarter. And, not to anyone's surprise, I think, kind of beating on both ends in terms of the booking side of things. I think, really what caused the stock to really turn around here and turn negative after hours is they did provide some guidance into the second quarter, essentially highlighting that, given the tight supply situation on the mobility side of things, they're going to have to provide some extra incentives there, and that could kind of weigh on the EBITDA number here in the second quarter before improving thereafter in the second half of the year. In addition to that, there's clearly uncertainty to the trajectory of how the delivery side of things is going to play out once this pandemic kind of fully ends. So that being said, I think overall the results are very good.
What are your expectations then? If that's the driver's side, what are your expectations for food delivery as we come out of a pandemic? Yes, more of us are hooked, but more people will want to go to a restaurant when they can and go to the grocery store.
Yeah, I mean, as far as the first quarter was concerned and, starting here in the second quarter, it has been very resilient. But our view is as we kind of start going into the summer months, we are going to see lower usage rates and that is clearly going to have a negative impact on the results. We do have a sell recommendation for that reason on a company like DoorDash. But that being said, we try to tell investors, hey, listen, you've got to take a longer-term approach if you're invested here in a company like Uber and what they're really doing, whether it be on the alcohol side of things, eventually when we're talking about some of the pot names out there. So there are definitely kind of opportunities for them to expand the addressable market, but we do see challenges in the second half of the year for that side of the business.
And how concerned are you about the potential regulatory issues, given what the Biden administration has done with Trump's sort of signature gig worker classification?
No, I think that's a great question. And to be honest with you, we're not as concerned maybe as some others are out there. We clearly saw some of this play out in terms of California, and it definitely weighed on the shares of these companies at the time. But we saw, the likes of Uber and DoorDash and Lyft eventually be successful on their end of things. Our view continues to be that drivers like kind of the flexibility that they're being given by the status they have currently, not being employees. So we think ultimately there is wiggle room here for these companies to kind of have communications with the Biden administration, and we do think eventually you'll see some sort of clarification and resolution to the uncertainty going on right now.
All right, Angelo Zeno of CFRA. We're following the Uber conference call. We'll bring you highlights as we have them. Meantime, Facebook shares also seeing some movement today after the company's independent oversight board upheld the ban on Donald Trump's account. It was suspended 4 months ago for inciting violence tied to the deadly January 6th riot at the U.S. Capitol. But the board also said the indefinite suspension was not appropriate. Trump calling the ruling a total disgrace. For more, we're joined by Bloomberg's Naomi Nix, who covers Facebook. So talk to us, Naomi, about what the board did and did not do here, because they also kicked the can down the road a bit.
That's right. They put more of the onus on Facebook. So essentially what they said is, Facebook made the right call in the moment to indefinitely suspend Trump based on his tweets. They said, Facebook accurately assessed that his tweeting or his posting posed a risk for future violence. But they said that Facebook essentially came up with a consequence on the fly and didn't really spell out those types of consequences or that response in its terms of service, and that Facebook needed to do a better job of clearly outlining a process for making these sorts of decisions. And so they gave Facebook about 6 months to review that decision and urged them to come up with clearer rules in these situations.
So we know that Trump has been banned on Twitter for good, and I've asked Twitter CFO Ned Siegel repeatedly if that could ever be reversed, and he has emphatically said no. But does this mean in 6 months, Facebook could potentially decide to reinstate Trump's account, or would that be another decision of the oversight board?
No, it means just that. So in theory, Facebook could decide to restore Trump's account, and Trump could make posts that continue to violate Facebook's terms, community standards. And Facebook could once again send that case back to the oversight board. So I think the people who are really hungering for a clear decision from the oversight board on this issue were disappointed today.
What is the political fallout here? Obviously, we heard from the former president. He is not happy, and we've talked about how much power he could have if he got back on Facebook to rally his base, to get them to support candidates of his choice, for example.
You're right. Trump was very critical, and actually other Republicans were too. We saw, House Minority Leader Kevin McCarthy essentially vow to regulate big tech, showing, alleging that this decision shows that these companies have too much power. But it also won some criticism from the left as well. We saw, some left-leaning organizations who said the fact that he's not permanently banned and that this, leaves open the door for his return to the platform indicates that the company also needs to be further regulated. And so I think there was just a disappointment, on all sides here.
So what is next? It seems like we're in a holding pattern, but what do you imagine is going to be going on inside Facebook with regard to this decision over the next 6 months?
Facebook has a lot of work to do. So they're going to have to obviously reassess the thinking and the process behind suspending Trump's account. They're going to have to be having conversations about, what are our standards for determining when to suspend a political leader's account. We saw the Facebook Oversight Board say, one of the standards they think the company should adopt is that if the post from the political leader poses a harm, but Facebook's going to have to figure out, well, what does harm, look like, and in what dicey political situations around the world are we going to, intervene here? And then, of course, there's a question of where does Trump go from here? He's lost his social media megaphone. How does he continue to harness the power of the internet to drum up his base and continue his influence in the Republican Party? He started a blog of sorts that he's calling his own social media network. But I think ironically, he's prompting, on the blog itself, he's prompting users to promote his posts on Facebook and Twitter, which essentially shows the limit of his digital presence.
All right, Bloomberg's Naomi Nix, thanks so much for your insight and analysis there. Again, looking at the statement from the president, he not just blames Facebook, but also calls out Twitter and Google, saying that what they have done with regard to free speech is an embarrassment to the country. Of course, we'll continue to follow that. Also, I've been listening into the Uber earnings call. Uber saying it is confident that it can achieve profitability by year end. Obviously, that'll be a huge milestone for them. We're going to talk to Lyft President John Zimmer a bit later this hour. And coming up, Galaxy Digital inking a deal to buy BitGo. We'll be speaking to Galaxy Digital CEO Mike Novogratz coming up next. This is Bloomberg. Caught in a crypto craze, Dogecoin skyrocketing to a dollar value of $90 billion today. It is the latest example of crypto mania gripping the markets. Our Wall Street reporter, Sonali Basak, here to break it all down. Sonali, walk us through the latest moves.
Yeah, absolutely. The rise in Dogecoin, just breathtaking here, really outpacing the broader crypto markets here. And Galaxy coming out with a report saying, Dogecoin is a joke that's really getting funnier by the day. With all of that said, it's a story as one of the oldest altcoins that many buyers are holding on to, which really draws a question of the rest of the altcoins and the cryptos beyond Bitcoin that investors can hold on to. But if we take a look at the cryptocurrency market at large, you will see that the market cap of all of them really does not compare to Bitcoin. And that's where the institutional interest is, and that's what we are going to be talking about. More adoption next and how far it can go into this year, Emily.
All right, Sonali, stick with me because speaking of big moves in crypto, we're going to take a look at the first billion-dollar deal in this space. The Bitcoin-focused firm Galaxy Digital agreeing to buy BitGo for $1.2 billion in cash and stock. Here with me, Galaxy's founder and CEO, Mike Novogratz. Mike, buying BitGo today, this $1.2 billion deal, what does this bring to Galaxy that you didn't have before? What big moves does this allow you to make?
Well, listen, first of all, it brings world-class institutional custody. With this deal, we become the second largest custodian with $43 billion assets under custody, second only to Coinbase. So we become a major player in the custodian space. They also have a big sales force. They cover 400 institutional accounts that we don't speak to, a bigger global footprint. And so we wildly expand our footprint. We're able to cross-sell with our expertise to their clients, their old clients, now our clients, and the same thing with their client, their products to our client base. And so great synergies there. But far more importantly, we've built this company where we invested in all things blockchain. We traded and participated on top of the blockchain. And now with the 60 plus blockchain engineers, we actually get to build the infrastructure of the future. And to me, that's by far the most exciting part.
Now, Mike, I got to ask you about this run-up in Doge. Maybe this is tied to Elon Musk's upcoming appearance on SNL, but my guest yesterday said he thinks Elon Musk likes Doge because he thinks it's a joke. I know you haven't been super positive about it. What do you make of this recent rally?
Listen, I think you have to, give credit where credit is due. The community that supports Doge, most of them are Gen Z and millennials, have worked themselves and the crypto market into a bit of a frenzy over this. Elon Musk has certainly been a part of it, as is Mark Cuban. Right? We're in a world where, because of what Chairman Powell is doing to money supply and to the debasement of fiat, people are finding value in all kinds of different ways. Real estate prices are skyrocketing in some areas. Baseball cards and collectibles are skyrocketing. What's driving equity prices is also driving crypto. And so there's a young group of people, there's almost a spirited nihilistic sense to what they do, that have started this as a joke, built a community. I think it's very dangerous to be invested here, right? It's as easy as it's gone up, it can go down. There's no institutional buy into this. This is a retail frenzy, but give them credit. They've built an $80 billion market cap on this kind of meme. Mm-hmm. There's no development going on the Doge ecosystem, right? But it's a pure bet, right? We wrote a report about being the most honest S-coin yesterday. And it's just the fact that Galaxy Digital wrote a report on Doge and really looked at all aspects of it, telling you something that it's achieved some sense of success.
Right. Mike, it sounds like you're worried about a number of bubbles in the crypto universe here. I know that you are hesitant to really go short on it and everything like that, but what will pop the bubble? What signs should investors be looking for of a downturn?
Let's be careful. I don't think crypto's in a bubble. I think there are coins, there's some altcoins right now that are going crazy. And so what happens often is, as institutional money finds its way into Bitcoin, some of the people that had money in Bitcoin take profits. They're in Ethereum. Ethereum's had a run. And so a lot of people that have invested in crypto for a while, all of a sudden have a lot of wealth. And they're like, what's next? And so you're having these retail driven rallies in coins like Ethereum Classic, Bitcoin Cash, really coins with no use case at all, but they become the hot, asset of the moment. These coins will go up in price and they will go back down in price.
Mike, do you think that Ethereum will catch up to Bitcoin in value, and how soon?
I don't know is the question, as the answer. Listen, Bitcoin has a very specific lane as digital gold. We know the market cap of gold is somewhere like 9 trillion, 10 trillion. Bitcoin's only about 1.2 trillion. So it's got a long way to go before it becomes gold. This jacket was, in honor of the year of the dragon. The next year of the dragon is 2024. I actually think Bitcoin could be at gold, which is about 500,000 Bitcoin by then. And so it's my lucky jacket. Ethereum has a different use case. Ethereum is really what everything's being built on. This new architecture for the financial services business, for IP with NFTs. And so it's really hard to understand what the TAM is. We value it like a network effect. Right now it's about $350 billion, dollar market cap. It certainly could go higher. It's hard to compare it to Bitcoin because it's completely different use cases.
Talking about use cases, I want to dig in on Ethereum Classic. We've got a question from one of our viewers asking if the crypto community, for some reason, thinks of Ethereum Classic as inferior because it was hacked early on. Is that, part of the reason we saw that fork back in the day?
Let's be very clear. Ethereum is an amazing project with almost every smart developer working on it, with tons of projects being built on it. That's NFT projects being built on it. That's decentralized finance being built on it. And it's stable coins being built on it. And so it is the ecosystem of crypto. Ethereum Classic has no real use. It is only going up because some retail guys are pumping it up. No one builds on Ethereum Classic. And so these are the things that in some ways, are part of the crypto ecosystem that kind of give the serious crypto, the institutional players, headaches, because it's like another meme coin. Doge, Ethereum Classic. Again, there's no long-term viability.
Well, then, if there's so much interest in these altcoins, Mike, how do you find value in them, and what else can you look to trade and find value?
So I don't find value in them. That doesn't mean you can't make money in them, right? These are momentum-driven coins. So if you knew what would be the next hot topic on Twitter or on Reddit where people are going, you could make lots of money, right? If you bought Ethereum Classic last night and sold it today, you're probably going down and buying your girlfriend a diamond watch. No institutional investors, and that's mostly who we're talking to, participates in this type coin. And it's interesting. It's not market cap driven. Some of these things are legacy coins, and they have communities around them. And these communities are really rabid, and they're not all rational in the classic sense of being rational, right? I sometimes call them nihilistic. They're very tribal. And you can see when you criticize them on Twitter, you almost get attacked and death threats. There is a real tribal nature to the defense of some of these ecosystems, which defies logic in some ways.
Those are quite some adjectives, Mike. Obviously you've got the BitGo deal today. What kinds of other businesses will you be considering to grow your business as you move towards potentially an IPO?
Well, listen, we're already public in Canada. And so we're moving towards, redomiciling and listing in the US in the second half of the year. Listen, integrating BitGo with its custody is mission one. Prime brokerage, both of us were working on, we're kind of perfectly suited to grow a much bigger prime business. And then just as exciting and more exciting maybe is participating in the DeFi community, right? BitGo can build wallets, they can build infrastructure for what I think will be, how we rebuild the financial services industry.
All right, Galaxy Digital's Mike Novogratz with our Sonali Basak. Much more to discuss. Mike, we'll have to have you back again soon. Thanks so much. And more ahead on Bloomberg Technology. Stay with us. This is Bloomberg. Tesla is about to lose a source of revenue that's been crucial to its streak of profitable quarters. The automaker formed by the merger of Fiat Chrysler and PSA Stellantis is exiting a European emissions credit agreement with Tesla. Complying with the standards on its own will save the company about $360 million. 2/3 of that would have gone to Tesla. And coming up, Lyft shares plunging after the Biden administration axes a signature Trump gig worker rule. We're going to get reaction from co-founder and president John Zimmer, as well as his outlook for the coming quarter. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Peloton has recalled its treadmill products and will stop selling them in the United States after a child died and more than 70 safety incidents have been reported. Shares fell the most in about 6 months. For more, I want to bring in Bloomberg's Mark Gurman, who of course covers the company for us. So Mark, Peloton recalling not just one, but both of its treadmills. This after pushing back against some of these safety concerns. What changed?
Yeah, I think a lot of people are curious about why both models are being recalled and for what specific reasons. So I kind of just want to break that down. So the first treadmill, this is the Tread Plus. This is the higher end model, the original one. It costs about $4,300. That one is being recalled because of the child death you mentioned and 72 incidents involving children, most of them involving children, having to do with lacerations, brain damage, all sorts of very scary stuff that you definitely would not want to have even an adult, not to mention a child or a pet and whatnot attached to. The second device being recalled is the Tread. That's the cheaper one. It was due to go on sale in the US on May 27th, so just a few weeks from now. That one is being recalled because the CSPC, the investigators on this matter, received lots of reports from users using the device already in Canada and other regions where it went on sale and in limited distribution in the US, that the screen, like the touchscreen monitor, when you're running on the treadmill, it can make the monitor become loose and fall. And obviously, if you have the top of the treadmill fall on you while you're running on it, that's not a good situation either. So clearly, both of their treadmills need work from the hardware department and fix these safety issues pretty quickly.
Now, initially, Peloton called some of the warnings about their treadmills misleading, inaccurate, and Peloton CEO John Foley out with a statement today saying that that was a mistake and that they apologize. You know, treadmills have been known to be dangerous. There have been accidents on treadmills before. What makes the Peloton treadmills potentially more dangerous, or are they more dangerous than other treadmills?
Yeah, two things. One, I would say that when the initial news came out about the child death and another incident related to a child, actually on the same day last month when this news first started to trickle out, I'm sure that dozens of other people started reaching out to Peloton and different organizations around the world to let them know about issues they have been facing. Oftentimes people are, don't really desire to come forward on these types of matters unless they've seen other people come forward first. So that probably made, more people become more comfortable doing so. And lots of reports probably trickled out over the last few weeks, leading to this very necessary step. In terms of how this rivals other treadmills, of course, there have been thousands of incidents over the past several years related to all sorts of treadmills. One, Peloton is a very strong brand, right? Many other treadmill companies aren't really branded that way. So if you have an incident on a treadmill of a no-name brand, it's not going to be as big of a deal. It's not really going to hurt that image of that company. Second, clearly the Tread Plus does have some issues related to the mechanism at the back of the treadmill where it is tending to pick up things. And I have a Tread Plus at home, actually, at my family's house, and that is probably the biggest treadmill I've ever seen in my life. And the sides of the treadmill use this extraordinarily heavy material. And when you knock on it, when you touch it, it feels like you're touching like a giant rock or stone. So this is a very heavy piece of equipment. And if something gets trapped on there, not a great situation.
Interesting. Okay. Gosh. A story certainly you and we will continue to follow. Thanks so much, Mark, for breaking it down in that way. I want to move on to Lyft now. Shares of Lyft and Uber falling after the Biden administration canceled a signature Trump-era rule that would have eased businesses' ability to legally consider workers as independent contractors. The Labor Department said the rollback was necessary to extend wage protections while cracking down on employer abuses. This after Lyft reported its first quarter results on Wednesday, beating estimates across the board. Joining us now to discuss, co-founder and President John Zimmer. John, good to have you back. I want to start with the big picture because you are seeing a rebound in demand, but driver supply isn't quite back up yet. Talk to us about the trends you're seeing right now as we get closer to a full reopening.
Yeah, thanks for having me. So overall, we had an extremely strong quarter, as you said. We exceeded across revenue, contribution margin, and adjusted EBITDA. On the supply side that you mentioned, this is the reverse of the pandemic beginning with the pandemic ending. Instead of demand falling, we have demand rising rapidly. So this is a good problem to have. Obviously, we're increasing the incentives for drivers to come back on the platform. We're seeing impact on that, and I think this is going to play out to get market balance over the next couple quarters. Something that we've had to do in the past, we know how to do, and we'll continue to manage.
We've been listening into the Uber conference call throughout this hour. Uber saying it's confident it can achieve profitability before the end of the year. They've been saying they would do it. Now sort of reiterating that you have a milestone of your own you are working towards. Talk to us about profitability from Lyft's perspective.
Yeah, last week we pulled in our milestone from end of year to Q3. Extremely confident in our ability to hit that. We're excited again to get now tailwinds in the rideshare recovery. And so we fully intend to hit that target.
So how concerned are you about what the Biden administration has done? They haven't issued a new interpretation of this gig worker rule, but how big a blow could that be to the overall model?
Yeah, I think what you just said is important to clarify that the Trump administration rule was never implemented, and the Biden administration has not announced a new rule or even the start of a new rulemaking process. So I actually see this as an opportunity to refocus the debate on what drivers want and need, which was very clear in California, which is a progressive state, that they want independence and benefits. And so I don't believe the government's recent comments signal any major change in direction. They do not impact our business today. And we're going to continue to work with policymakers at the state level, as well as at the federal level, to make sure that they hear the voices of drivers to get benefits with independence. And I believe over the next couple of quarters, we'll have additional models like what we did in California, but in other states.
And yet there still seems to be this continued criticism about that model, and we're seeing new laws go into effect in different countries. I asked Dara Khosrowshahi, the CEO of Uber, this very same question about the sort of equity that is created by this model or not. Take a listen to what he had to say.
We think this model of maximum flexibility to earn the way that you want to, along with some benefits, we think that is the future model, and it's one that we're going to support.
What do you say, John, to the critics who, can't shake the belief that this model leaves some folks behind, essentially?
Sure. I'd first ask them, have they talked to their drivers? And what is the opinion of the drivers? Those are the workers that are implicated in whatever type of rule or law is changed. And then I would make sure we're listening to what we're trying to accomplish. We want to add and increase benefits for drivers while retaining their independent contractor status. I went to our general counsel years ago and asked to add, in the beginning of Lyft, and asked to add various benefits, of which with independence, for some reason back in labor code from decades ago, benefits were only tied to employment. And I think there's a lot of important benefits and protections that the labor movement has fought for and earned for employment. And I think we should bring those over to independent contractors as well. So I'm not saying that we don't want to do those things. I'm saying that the ability to work on multiple platforms, the ability to turn on and off the app whenever you want and have an amount of benefits that scale with the amount you work is a positive thing.
Now, airport rides spiked in April 65% compared to January. Spring break was happening. Are you expecting a roaring summer? And where are you expecting, or where are you seeing places pick up the most in the U.S.?
Yeah, we are projecting that this will be, as you said, a roaring summer, maybe another roaring 20s, as people can get back out. I know myself and friends and family are incredibly excited as we get vaccinated to be out and about, to have to travel. And so I think travel will be booming again this summer, and we want to be there to support our drivers and riders.
All right. John Zimmer, Lyft co-founder and president. Always good to have you, John. Thanks so much for stopping by.
Thank you.
Roaring summer. We'll look forward to it. Okay, coming up, Jessica Alba is out with a blockbuster, and it's not a movie. It is a public market debut of her personal care product brand, Honest. I will speak to the actress turned entrepreneur Alba and CEO Nick Vlahos next. This is Bloomberg. Bloomberg has learned that the luxury gym operator Equinox, popular among financiers and celebrities, has held talks to go public by merging with a SPAC backed by investor Chamath Palihapitiya. Negotiations between Social Capital, that is Chamath, and Equinox, which also operates SoulCycle and Blink Fitness, not finalized yet, and it is possible the discussions won't end in a deal, but sources say a transaction could value the combined entity at more than $7.5 billion. Palihapitiya's Social Capital had a Sophia SPACs have merged with companies from Virgin Galactic to Open Door and Clover Health. And staying with the rise of wellness companies' personal care products brand, the Honest Company, co-founded by celebrity Jessica Alba, closed 44% higher today in its IPO. A $413 million debut, the firm now valued at more than $2 billion. My colleague Caroline Hyde and I caught up with Alba and CEO Nick Vlahos earlier to get their reaction to the big day.
I'm so grateful for my Honest team, for my partner, Nick Vlahos. When he joined me, we put together a strategy around what we wanted to do, and we, worked very hard at making that strategy really come to life, and here we are today. And so, you know, and our very loyal community, thank you for being part of our community and bringing us into your home and trusting us with the most precious person in your life, your little people that you're raising, and you want them to thrive.
The most precious people indeed. Nick, you now have partnerships with Amazon and Target and a range of products that go beyond baby products. What's the vision now that you've raised this cash? Could we see you do acquisitions? And if so, what kinds of brands and products?
Yeah, I mean, we love the fact that we have Honest as a lifestyle brand that can go across multiple categories, and that's what makes this brand so unique, in that promise around clean ingredients, around sustainability, around social responsibility really resonates not only in the diapers and wipes business, but our personal care, our skin and beauty business, as well as our household and wellness. And what we saw this past year, over 34% of new consumers at Honest.com came through the skin and the personal care space. So as you think about our growth, as we look to the future, you know, we're going to be focused on this brand and the ability to continue to extend this brand in a very methodical way before looking at and exploring anything from an M&A perspective. We're happy with the portfolio that we have and the ability to go even deeper and wider within the Honest brand.
Nick, of course, that portfolio weathered extraordinary times of the year of 2020. And I know where you used to come from, Clorox, having to raise prices, talking about, well, the circumstances in terms of the price of goods going up. What do you see in terms of how you're having to navigate bottlenecks, supply chain issues going forward?
Yeah, you know, what I have is, you know, over 30 years of experience within this industry, and there's always rainy days, and there's always input costs that shift and change. You know, what I've learned over the years is preparing for those rainy days. So for an example here at Honest, you know, we have 3-year productivity plans. Not only are we driving breakthrough innovation with 3-year strategic product plans, but we're also looking at, from a 3-year standpoint, where do we turn around and navigate, really, how do we drive waste out of the system? So when these input costs start to shift on us, you anticipate and you're prepared for that. And that's why when you look at our margin profile, you know, since 2018, we've expanded our gross margins here roughly 1,100 basis points. In this past year, during the pandemic, we picked up roughly about 370 basis points of gross margin expansion. So what we're about, as we look to the future, is really, you know, consistency on the top line, margin expansion, and really driving good growth.
Talking about good growth, talking about rainy days, Jessica, what an extraordinary time 2020 was. And I know that you looked at it from a philanthropic endeavor in terms of donating millions of wipes, millions of diapers. You've got advocacy for women. But I think of you and your story when you talk about being born to hardworking Mexican-American family, parents working multiple jobs. You know how difficult it is to parent. And well, your price point now as Chief Creative Officer, are you always going to stick for an aspirational client, a more premium product, do you think?
You know what's interesting is when you have the types of values that we have embedded in Honest, and you are standing for people's health and wellness, when you are thinking through the planet and sustainability, and when you have ethical practices across the board, and also are thinking of diversity and inclusion, all of those things, people expect for you to really offer it at the right price. And for us, we want to offer it at the right price that consumers are really gravitating towards. So for us, we're pretty flexible with what that looks like, as long as it continues to drive good growth. You know, we want to always increase our margins and have really good, strong growth for the future.
Honest co-founder and Chief Creative Officer Jessica Alba there with CEO Nick Vlahos. All right, coming up, the untold story of how Jeff Bezos beat the tabloids. We're going to have an exclusive excerpt from the new book, Amazon Unbound, by our very own Brad Stone. He'll be with us next. This is Bloomberg. A new book out next week called Amazon Unbound, Jeff Bezos and the Invention of a Global Empire, captures the CEO's decade-long transformation from a single-minded tech geek to master of a trillion-dollar empire. Here with some exceptional reporting of what happens when Bezos gets cornered by adversaries is the author and our Bloomberg senior executive editor for global technology, Brad Stones. Those words, Brad, yours, not ours. How did, in your excerpt today, you talk about how Bezos beat the tabloids and you focus in on this very particular time and phase in his life that we all remember when photos of Jeff Bezos were in the National Enquirer. How did he beat the tabloids? How did he rise above that moment?
Right. Well, I mean, if folks reflect back to that time in 2019, they'll probably think, well, wait, how did that happen? Was it the brother? Was it the Saudis? Was it Trump? And he didn't like the Washington Post reporting. Bezos, of course, owns the paper. And I think that was sort of the point, right? In that remarkable Medium post that Jeff Bezos wrote in early 2019, he said that the motives were still to be better understood and that AMI was trying to weaponize journalistic privilege. And he wrapped himself up in the Washington Post and said, this is the most important work that I do. And when I researched this for my book, which frankly, Emily, I thought was a tame little business book until all this happened, I found, that it was a simpler story, that it really was the brother who had sent all that information to the National Enquirer. But Bezos and his camp, I don't know if it was deliberate. They might have suspected that there was a political conspiracy, but they cast all this doubt. Sympathies in the whole episode swung to Bezos' side. He kind of weaponized the Post a little bit and his ownership of it. He kind of emerged, as we say on the cover of Business Week this week. Jeff wins, and certainly recently he does seem to win a lot.
Right, but is he going to continue to win? Blue Origin, his, of course, space adventure project, just today announced its first human space flight set for July 20th, though we know he's in a race also with Elon Musk and Richard Branson. Is Jeff Bezos going to win in the space race too?
And there's a chapter on Blue Origin in the book, and it's really been a remarkable story. 20 years, okay? They've moved very slowly. They like to say step by step, ferociously, and they've done this suborbital spaceship called New Shepard. And a couple of years ago, they said they were going to start selling tickets, and it didn't happen. And so, if you're asking, are they going to win? Well, they're not winning. I mean, it turned out that it was a race, and SpaceX got there first. They're about to launch again, and they're launching to orbit. They're pulling off impressive technical feats all the time. And I think Blue Origin, has fallen behind. There could be many winners, but I think certainly there's a lot to prove there.
Well, and then, of course, there's winning among Amazon's own workers. Your team, Josh Eielson, Matt Day, have a new piece out today talking about the policies Amazon has for its contract drivers down to their fingernail grooming and their body odor. Clearly there seems to be continued agitation on the worker front. Many workers, yes, are likely happy, but there are also these stories that continue to resurface.
Right, and this is a complex issue. I do get into it quite a bit in the book, but let me try to boil it down. The drivers that you see in your neighborhoods, on the highways, on the pilots that are flying Amazon-branded airplanes, those are not Amazon employees, those are contractors. And it's actually not a unique business arrangement. FedEx or DHL uses contractors. But what Amazon tries to do is create an orderly experience out of that sort of fissured work relationship. They don't employ these people, but they want them to present themselves as Amazon employees. They want them to be safe on the roads. They don't want them to fling packages into people's gardens. And so what Josh and Matt's story is all about is the subtle ways in the contract that they're trying to enforce some order and some orderliness around these workers. And the problem is that makes them more legally susceptible to being called employees. And Amazon, like FedEx before it, is going to have to fight all of those battles in court in the years ahead.
So look, I know we're going to have to order your book to get the full story, but give us a preview. What is the next chapter in the trillion-dollar empire for Jeff Bezos?
Well, first of all, Emily, there is a complimentary copy waiting for you. So, everyone else should pre-order, but your signed copy will be on its way. The book charts the last 10 years of the company and all of the crazy things that happened. It really does seem like there's an episode or a scandal or a surprise around every corner. It's about how Amazon built Alexa, how it acquired Whole Foods Market, the marketplace, and all the chaos with third-party sellers, antitrust scrutiny, and then as we talked about Jeff's incredible journey, where he really did transform himself and really became a citizen of the world, his eyes opening up to so much, the evolution of his philanthropic efforts, his personal life, and now what he's going to do next.
You do cover all angles, Brad. It is a riveting book. I've gotten a peek at my advanced copy. Thank you. Pre-order yours today. It is out next week. Bloomberg's Brad Stone, thanks so much. His new book, Amazon Unbound, is out on Tuesday. You can buy it on Amazon and elsewhere now. And that does it for this edition of Bloomberg Tech. We'll see you tomorrow.